this is Joshua with Crosse Finance, and I just want to bring you a quick video about how to save for your down payment. The first thing you really should do to save for down payment is to go to the bank that you have your checking account with and open up either a second checking account or a savings account. And generally speaking, because most of these banks are now providing a free checking account for personal banking, it shouldn't actually cost you more money to open a secondary one. And then what you're going to do is you're going to take and transfer every week a small amount of money from your regular checking account to your secondary checking account or your savings account, whichever one you decide to open. That transfer should be done automatically through the online banking, and you can set it up so it happens without you paying attention. I do mine on Monday so that I don't have to worry about thinking about it happening, because Monday is usually my busiest day, and so I don't want to think about it, I just want it to happen. If I physically had to go in every week and make the transfer, I then start to make excuses on why I shouldn't make the transfer this week. And so what you want it to be is an automatic scenario without you thinking about it. The biggest thing to do is just go do this. Even if you're only going to put $1 every week into the new savings account, I would suggest trying to figure out what the highest dollar amount you can afford to do right now, whether it's $10, $20, $30, $50, because what will happen to you is you will start to see this savings account build up. And as you see it build up, it gives you a positive feeling and positive emotion towards your down payment building up, and it'll allow you to start to see where you can save more money and then increase that weekly payment going in. The reason weekly is better than monthly is because it happens much more naturally. One of the things you can do is on your payday, you can do it on your payday. Some people do it on their payday. The point is to start making a payment into a secondary checking account or savings account. That money should not be touched for any reason except for a major emergency or for your down payment, but it's whatever the designated thing is. So if you want to have a pizza one day and you decide you have some money over there you can spend, it's a bad use of that money. If you want to go and have some fun, it's probably a bad use of that money because you're trying to create a long-term savings account. So once you start to build up that savings account and you see that it's actually creating momentum, you can then go in and increase your weekly payday. Some people's paydays to themselves is up to $1,000 a week, even more, because it becomes a portion of their income and they can see that they need to save more money. Then you can take that down payment and use it towards the purchase of your next home. Regardless of whether you buy a house from us or from the marketplace through a bank, you're generally going to need a down payment to save a down payment. So I hope this tip helped. If you have any questions, go ahead and leave them in the comments. We'll try to answer them as best we can. Again, we'd love you to like, share, and comment on all our posts. So I hope this helped. Have a great day.